Good afternoon, everyone, and welcome to the second exciting episode of the Quantrix Planning for Good webcast series. My name is Tom Ahern, and in my day job, you can tell I'm not a moderator by trade. I'm the account manager for Quantrix, based here in Portland, Maine. So it's my pleasure to be your moderator for today's event. Just briefly, here's the agenda. I'm really excited that our featured presenter is going to be Jason Klinghoffer. He's the director at Mischler Financial Group. We'll follow that up with a little bit of Quantrix overview and a demonstration, just very basic. And then we're going to introduce our Planning for Good series. And really excited about this program. We've been having it, it's been going for a month now and just had fantastic returns to date and excited to keep it going. Then we'll get into the Q&A session and wrap it up and give you our contact information at the end. All right. So, if I can advance the slide here, let's get this party started. It gives me great pleasure to introduce today's presenter, Jason Klinghoffer from Mischler Financial Systems. Besides building a profitable and thriving business practice at Mischler, Jason served our country as a U.S. Marine Corps sergeant. He is an avid pilot of a private plane, which he gets to enjoy in beautiful, sunny Southern California. So, just a little bit of context here. When I was a newbie at Quantrix 5 years ago, Jason came to our annual user conference and he presented his first iteration of MaxQ Analytics. And I was absolutely floored at what he had built with Quantrix. MaxQ Analytics is a customer-focused solution that creates immense value and utility for Mischler, for Mischler's clients, and for Quantrix. It was a home run all the way around. And it's only gotten better, for all involved all over the years, and I cannot wait to see the latest iteration of MaxQ today. Therefore, I'm incredibly excited to introduce Jason Klinghoffer, Director at Mischler Financial. Take it away, Jason.
Very good. Well, thank you very much for having me, Brad, Tom, and the Quantrix team. You guys are always great, and definitely appreciate the opportunity to come here and speak today. To get started here, I think I need to, can you pass me the baton here and I can throw it over to, there we go. Yeah, perfect. Let me do this and then make sure we got, there we go. Show this. There we go. That should give us a full view there, hopefully, of the slides. So if not, if you're not seeing this, let me know. But this should be good. So again, as Tom was saying, my name is Jason Klinghoffer. I'm the director of the Debt Capital Markets Group for a company called Mischler Financial Group. We are based out of Newport Beach, California. We also have offices throughout the country and a syndicate operations and underwriting group that's based out of Stamford, Connecticut. The Mischler Financial Group is the American financial services oldest minority investment bank and institutional brokerage that's actually owned and operated by service-disabled veterans. We were founded in 1994, so we're a little over 25 years old. We were also the first FINRA member firm to become federally certified service-disabled veteran business enterprise in the broker-dealer space. Now, Mischler Financial Services, domestic and international institutional investors in both the fixed income and equity space. And so that means we don't have any real retail clients. So for those of you familiar with, TD Ameritrade and Schwab and things like that, so more retail focused. We are institutional investors only. So we deal with private money managers who indirectly deal with retail clients, but then we also deal directly with public entities, which is something I'll explain that my team does, and then we deal with corporate treasury and super sovereign funds, sovereign wealth funds, and hedge funds, all kinds of funds across the spectrum. So we have a pretty integrated operation on both sides of the coin, in both fixed income and equity. On the fixed income side, since that's my specialty and where I reside, we really kind of specialize in 4 areas. So the first area we deal in is heavily is agency debt. So the GSE, which are government-sponsored enterprises like Federal Home Loan Bank, Fannie Mae, Freddie Mac, super sovereign firms, if you've ever heard of the International Redevelopment Bank, the African Development Bank, things like that. Those are called super sovereign firms. And then also we specialize in syndicate operations, meaning that we come in and we actually co-manage and underwrite deals directly for those banks and institutions. On the corporate debt side, we do a lot in investment grade. We do a lot in high yield emerging market and some in special situations or distressed debt. We're also involved in the structured side, so your mortgage-backed securities, asset-backs, your collateralized mortgage obligations, commercial mortgage-backed securities, agency, both agency and private label. So those backed by the GSEs and private label types of structures, and then municipal debt, which include general obligations and revenue bonds. Kind of a unique aspect of our firm is we were actually the only regional or diversity firm that's ever been named a direct counterparty of the Federal Reserve in both Treasury and mortgage-backed open market operations. Now, for those of you familiar with the idea of open market operations, that's how the Fed controls the Fed funds rate, and they are actively engaged in open market operations with 24 primary banks, which those banks are the ones who are required to interact and participate in the auctions and the buying and selling directly from the Fed. As a test run a couple years back, they decided to open that up to only a couple of firms. And there were 3 firms selected for the Treasury operations, 3 for the mortgage-backed operations, and we were the only firm that was selected for both. So it was actually a very unique honor for us to participate in that. Now, as for my team specifically within Mischler Financial specializes in the trading of fixed income securities for large public fund treasury groups. So these are funds that really come from 2 sources. So you can think of cities, counties, special districts, state governments, things like that, that really have monies that come in from tax revenues. So these are built up revenues that become reserves for the institution, or from bond issuances. So those bond issuances that are set out for, school projects or building of fire stations and things like that, those monies typically come back into the Treasury group and are invested out for a period of time until those capital projects come to fruition or start to mature off and they have to be paid. Because a lot of times those capital projects have long schedules associated with them. So those monies are under the fiduciary control of either a treasurer in a Treasury department or a finance department, and it kind of depends on the state and how the institution is logistically organized. But it's usually either one of those 2 departments that's responsible for the investment of those monies. And brokers like myself and Mischler Financial have to be utilized to facilitate these securities transactions. So just like you and I, for retail purposes, have to go out to a TD Ameritrade or to do a trade personally, the same thing has to exist for institutional investors who still want to buy fixed income securities, or even on the equity side, you have to utilize a broker to do that. And so we are one of the firms in the country that does that. So our ultimate job is to find securities that make sense and provide competitive execution. However, this is not a job that, it kind of sounds easy, but it's not really as straightforward as it sounds. So to give you a little bit of background in this and why I say that, it really comes down to thinking about our market and the market competition that we face. So first off, there are literally dozens of firms that specialize and compete specifically in the public treasury arena. Now, over the past decade to really 15 years, I've been doing this about 15 years now, and really shortly after I started in this business, there was really 3 things that started to really pressure this market that has really caused a significant shift in who's involved in the market and the types of value add that's available. And it really comes down to, 1, price transparency. So price transparency has been something that FINRA and the SEC have been adamant about creating. They've done so in the equity market, and they've tried to do so in the fixed income market as well. So they have new systems like not really new, but they're including more and more securities in their trace functionality, which makes the price public within 15 minutes of any transaction that occurs for any number of investment grade type transactions. So all corporates, all agencies, all of that is actually publicly available information within 15 minutes of the transaction occurring. So there's a lot of price transparency. There's also a political bias that's come into this in the sense that you think about Wells Fargo and the whole debacle that they had recently with the bank accounts scandal. That causes a lot of pressure because of social media and a lot of the organizations now that are very social conscious. There's a lot of bias that occurs in what firms that institutions are willing to work with. And so when that scandal came down with Wells Fargo, for instance, they were a pretty good sized player in this space. And very quickly that spigot was turned off because a lot of those types of clients and those types of institutions did not want to face doing broker transactions with them because of the potential blowback from their constituents, which is, certainly in this time and environment, we can all understand that. And then there's also regulatory pressures from that have come down from the SEC and FINRA, such as FINRA 2111, the municipal advisor rule, which really puts a lot of pressure on the firm in who they're transacting with, what they're transacting in, and the suitability of those transactions. And so when you take all of those three things together, what it's really done is really help destroy the value add proposition and what firms are willing to bring to the table to assist their clients in doing the job that they need to be done. So what I consider this to be is really this kind of proverbial race to the bottom, where it's really forced a lot of the larger banks to withdraw from the marketplace because the cost benefit really doesn't make sense to them anymore. It's a low margin, high volume business. And with all of these pressures, the regulatory aspect, the price transparency at low margins, a lot of the bigger banks, which, I won't name drop, but you know all of them, a lot of the primary banks no longer will even deal with these types of institutions. And so what that's really done is it's left the marketplace for regional and diversity-based firms like ours to really come in and compete for the business. Now, the byproduct of that is that most brokerage operations of our size and in this space also have limited budgets and constrained resources to provide much beyond the idea of competitive price execution and competing on price. And so most firms take the approach of just trying to come in and try and give the absolute best execution, which can whittle down a trade, to pennies, to almost to the point where economically it doesn't make sense. But when you have enough competition and that's their only sticking point, obviously that can be, it makes it difficult for firms to survive in the long run. Now, when we actually look at the institutions themselves, that helps me kind of set up the problem that we're going to talk about how we've tried to solve that, is that a lot of our public institutions face the same difficulties in the sense that they have small budgets and a lot of times very limited staff resources. And so there's kind of an ongoing saying in our space where we talk about the idea that a treasurer or portfolio manager that's running public money has 90% of their job risk, but only 10% of their time spent on actually investing public funds. And that's typically true because those people typically have a lot of other things on their plate, but yet the investing of public assets, you would think would be by far the most important thing, yet it's quite honestly one of the things that's spent a very little amount of time on relative to the number of tasks that a lot of these public officials have to deal with. And so, and I'll give you a great example of that is when I was actually traveling yesterday, I was literally talking to a gentleman who manages billions of dollars for an institution out west, and he literally couldn't get his IT department to get him an 8 gig RAM upgrade for for a software program that he needs. It was maybe a $60 upgrade that he needs to meet the minimum requirements for a critical trading platform he deals with. And so, there's a lot of frustration from that. And you think about someone who's responsible for billions of dollars yet can't get a simple IT request through because it costs $60. So, it's just a prime example of the fight that these guys are dealing with, that they don't have a lot of resources and would rely potentially on firms like ours to hopefully give them some additional resources to help them do their job. So these limitations and this little outside help creates a real disconnect between the actual management process and an efficient or appropriate management process that really could be facilitated. So to set us apart, my goal really in ultimately deploying what you'll see a little bit of here at the end was to create a suite of analytics and tools that provides public fund money managers with these resources. Right? We can't deploy these resources that cost an additional amount of money to them because budgets are already constrained. It's very difficult to get public institutions to spend money on third-party software. So we needed to find a way to a cost-effective manner to be able to come in, build something out, and be able to deploy these resources without shifting the cost unnecessarily onto the client. I needed to provide these tools in an efficient platform that could really be managed and administrated through a small team. And so this was originally just my effort. I have one or two people now that work on the MaxQ team, and so they're getting up to speed and as my backup and starting to do further development. But it's a very much a small team environment, and so I needed to be able to administrate and deal with all of the various concerns of deploying a system like this through a very minimal number of people. And I also needed it to be flexible and capable of creating some customized solutions that could be really deployed in a timely manner, and again, without the significant overhead or need for additional programmers or personnel to be involved. So obviously, like I said, I've been doing this for about 15 years now, and this has been my core focus throughout my career, has been in the institutional space. And so Quantrix and the ultimate MaxQ analytics now that now exists was not the first iteration of this. So we really did this. I did this with a former team of mine, some colleagues of mine that really kind of started this process, and we really did it a lot in Excel. Most of the things that we were doing were all Excel-based simply because, one, we were very familiar with it, and two, it's widely accepted. Every organization has it. And so it's really kind of the go-to easy, theory to be able to come in, and if you can create some spreadsheets that work, that there's, people on the other side that can typically access them and have a basic understanding of how Excel works. Now, the problem with that is that it really came with a lot of problems for us. And so the first thing is that, and hopefully most of you are fairly knowledgeable of Excel. If you're looking at Quantrix as a potential replacement, you probably will be able to understand some of this. But Excel in general requires significant formula writing. So as you know, the Excel is really based at a cellular level. So anything you need for a worksheet to react, every cell has to be programmed to do something. So in most cases, unless you're using dynamically named ranges or in some tricks that exist in Excel, you typically would have to literally program, and you do actually have to put a formula in every single cell, even if it's a named range or an array or something like that. You still have to tell each cell what it needs to do specifically. Right? And so there's significant amount of formulas that have to be written in order to create spreadsheets with the scope and size of what we're dealing with. There also had to be, a decent amount of VBA involved because of the scripting mechanisms and some of the automation and things that we needed to build out. So VBA was also an important aspect, which is not necessarily the easiest thing in the world to have access to if you don't have a lot of experience here. So we also had some scope limitations in that we would require multiple workbooks in order to create a single solution. And so one example of that, which I'm not going to show that today because it's fairly involved, but what we call the IFB model, which is our fiduciary benchmark or our strategy model, that actually comes in and does several different things. It comes in and looks at the liquidity profile. It does a cash flow analysis, a duration optimization with a maturity bucket outflow or maturity bucket output, an asset allocation, risk reward profile. It basically sets up all of these elements that allows an institution to create a diversified strategic portfolio that they want to look like on average. And in the past, we kind of did that in a way that we would actually have to separate out the individual processes. So the cash flow analysis and liquidity profile would actually have to be a completely separate workbook, because it had, in and of itself, had some complexities and a lot of graphs and visualizations and some navigation that needed to be done. And so if we put too much into a single workbook, there was considerable slowdown and confusion that would occur because of the number of tabs and all the buttons and everywhere that it went. So we really found that we had to piecemeal those out one by one, and that's not very efficient. Another big problem for us was that large data set analytics were impossible due to sizes really approaching 1 gig or more. So there's a model that I have that looks at large amounts of historical index data going back decades, and that one alone, the single database, is over 1 gig in size. And so if you come back and try and open a 1 gigabyte spreadsheet and then try and manipulate it, create logic, formulas, and start mixing and matching things, it becomes very difficult. And so I don't know how many of you have tried to open a 1 gig spreadsheet, but you're going to be sitting there for a while. And so it's not very efficient with large amounts of data. We also needed that the workbook to be managed in an environment that was efficient. And so Excel was not something that, from an online perspective, that cloud perspective, beyond the cloud environment of being able to simply share workbooks, we really just had to use PDF output. So anytime we would come up with something, we had this great model and we had these nice visualizations. But really, at the end of the day, instead of just deploying out the spreadsheet, we would just deploy PDF outputs and send them over to them, via email. And so you go through all of these steps and take all this time to create these fancy analytics, and then you end up with PDF printouts as the final result. And it felt like there was a real bottleneck there in the efficiency process, and ultimately the experience that we wanted our users to have really couldn't exist within Excel. There's also security concerns and version mismatches within Excel that really caused a lot of errors and issues. So if you had, some of you are probably familiar, if you try and open up workbooks that have, scripts and VBA code, those macros will set off macro security. So, if you have to get admin involved in order to take off those security parameters, that can be a pain. There's also VBA library mismatches. So if you have someone really working in a very old school version of Excel versus what you've developed it in, that was another problem, because you could have an institution that's running on an Excel version that's 10 or 12 years old, and you're running on the newest Excel. That VBA library could be out of date, and it causes mismatches in its ability to actually function correctly. So that was very frustrating. And then the formatting and presentation really was not robust, because it's really limited to that row column cell architecture. So as you know, you come in, you can, as you put the formulas in the cells, you also have to put your formatting. So any bordering, any text, font and size and bold and all of that stuff really has to happen within the workbook. And so you have all of these elements being put together that require, a significant amount of resources from the PC perspective and from the technology that can really cause Excel to slow down and not be very efficient. So with that in mind, Quantrix was introduced to me about 7 years ago by one of my colleagues who was very, very good at it, and was a huge fan. And I have to be honest, I'll be upfront, I was not at first open to it. I had actually kind of told him that, hey, this is neat, but to me it seemed very gimmicky. But I did not have any idea. I never took a look at it. I saw some of the outputs, but I was very much ingrained in my Excel background, because I was, I think it's natural for anyone who's very comfortable in something to be hesitant to try and move into something new to see how it works. And so in the beginning, for a little while there, I was very hesitant to do so, until it got to a point where I realized to deploy what I wanted to deploy was never going to happen in Excel. So I needed to open up that world and really figure out, is this a solution that could take us to the next level? Like my former colleague really believed it could. And so the answer is that yes, clearly yes, that Quantrix has exceeded my expectations and has really done wonders for what we've been able to do. And there's really a few reasons for that. And so the first is this idea of the separation of that data, logic, structure, and presentation. So we just talked about how Excel really forces you to put everything at that cellular level. The beautiful part about Quantrix is that you actually separate out where the data is stored. So it doesn't have to be stored locally. We can create data stores through, SQL queries. We can do it through CSV files. We can do it through web sources. There's all kinds of different ways to have the data storage itself separated out from the actual location of the model. The logic and structure is separated out so that you have a clear path to build out your matrices in tables in an environment that allows you to, very specifically write formulas in a very constrained manner that only manipulates the areas that you want it to manipulate. And then you come into the presentation arena, which I'll show you a little bit of how we've built ours out. But the presentation canvas opens things up for you to be able to really build out what I think are very professional and very well done, or really well done analytics and views through this presentation canvas. And so I know that there's a lot of people out there that love Tableau. It's a visualization platform, very, very big organization that's made its name on creating these robust presentation canvases or presentations that are available for you to take your data and upload to their system. But one of the things that I've been very impressed with is actually the innate ability of Quantrix to actually create its own visualizations. Definitely to the point of where it works for us in a way that I know our clients appreciate, and certainly being a client-facing type of system for us, it's important that this does look professional, and that there's that we do stand up to the competition. So I think in many ways that's been a non-factor for us, and we've been able to use the tools internally with Quantrix without having to use third-party systems like a Tableau to get the type of visualizations that we need. Basically with that, also the limited formula writing and scripting knowledge, I can tell you that one of the first aha moments that I had was when I had a spreadsheet that had tens of thousands of formulas in it. I came in, I went through the Quantrix model, the trial and error to try and figure it out, and then ultimately I was able to recreate that same spreadsheet in a single model, and I did it with a couple dozen formulas. And so it was very much a kind of an eye-opening, mind-blowing experience for me to be able to come in and actually recreate everything with very limited logic, and I ended up with a model that was less than 1 meg in size, versus a spreadsheet that was probably 10 or 15 megs in size because of all the formulas. So I had a much more agile, smaller model that was quicker, and I did it in a way that was very, very limited in the amount of formulas I had to write. So that's a really beautiful part of Quantrix. The dimensionality, the category, and matrix linking has been really, really efficient for us, in the ability for it to reference the data, so we don't have to put a ton of logic or a lot of formulas into it to produce those results. The impossible analysis I was talking about, like on the 1 gig, type spreadsheets that used to be impossible. Now through that data linking, we're able to come in and we can access those large external data stores and really manipulate a lot of information, and be able to even constrain the information to only what we need. And so, not only data linking, but they also have what was called data nav. I believe it's just now just the data update that they have, but essentially you can come in and actually filter out very specific things within the data that you need. So I could go out to that 1 gig data store, but if I only need to access, let's say, a 50 meg subset of that, it's very easy to do that by referencing very specific criteria, and it will only pull that information into the model. And so it has its own built-in querying system to be able to do that, and that's actually very, very helpful with a lot of different models. So the cloud has also created a really controlled environment for us. So we have this 24/7 system set up for our clients to be able to access the models, manipulate data at their own convenience. We run the cloud enterprise system, so we actually have the servers embedded in our office. So it's run all very seamlessly through the Quantrix team. Actually helps us out from the update process and everything. So we don't have to have a lot of IT commitments on our end in order to make this happen. They've made it very cost efficient for us to be able to come in and run a very sophisticated platform, and doing so utilizing the resources that Quantrix already has. And then obviously the presentation canvas capabilities I just spoke to, it's really allowed us for this, what I think is a very professional design and a user-friendly reporting output. So where have we been? Where are we headed? So when MaxQ launched, we launched this back in 2016 with the initial set of models. Our initial user base represented about 500 million in assets, which may sound like a lot of money, but in terms of institutional investors, that's a pretty small sum. So it was limited to just a couple of users that represented about 500 million in assets. Our growth since then has been completely organic, meaning we have spent next to no money from an advertising and marketing perspective beyond the conferences that we attend or the sessions that I'm invited to speak at. We've put very little money into actually trying to grow this through some broader effort or advertising effort. It's been almost exclusively through word of mouth and client referrals. So I would say at this point, as we're probably on a one-to-one basis. For every client we naturally get organically through our own efforts, we get one client through a client referral. So someone new comes into a position and they're talking to one of their counterparts and they recommend us, which honestly, this is the first time in my career that I've really ever seen that type of phenomenon where you actually have our clients out there really advocating to their counterparts and their colleagues in the business to come in and utilize our service because of what we bring to the table. So it's been a very exciting time for us, and we're really looking forward to see where this leads in the future with this type of growth. So our model library continues to grow. We have things that are very basic, from very basic calendars that helps our clients come in and look at when they could come in and structure new issues on a time basis, to complete strategy development models that come in and look at their asset liability framework, the duration optimization, their asset allocation, cash flows, liquidity profiles, all of that, all embedded in a single model. And so, the dynamics of from the very simple to the very complex, the actual process for us to deploy it and the client to access it remains the same. And so that's a very beautiful thing, that once the client understands the basic navigation of how to get through a model and how to work it, we have the ability to really deploy that model. And we can also limit the ability of the user to be able to come in and screw things up. And so, one of the worries obviously in Excel is that unless you lock everything down, which can also make it difficult for things to run, right, you could potentially have someone come in and override a formula or mess up a cell. And that's something that is really nice in Quantrix, is that there's a very easy way to come in and lock out the things that need to be locked out and open up the things that need to be opened up. And so I'll show you a couple examples of that, where we have filters applied where the client can interact with those filters, and the data will be manipulated and will change, but there's no ability for our users to come in and actually manipulate and change the model and screw it up. Which is important because we are a regulated entity, and the last thing that we want to do is ever have to go back and deal with the SEC or FINRA and tell them, the client made an erroneous investment decision because they came in, made a change it wasn't supposed to change, and our system spit out something it wasn't supposed to. That's not a good conversation you want to have. And so from that side of things, we feel very protected that Quantrix has given us that ability. And so now MaxQ is really being utilized by some of the nation's largest public institutions. We recently reached this milestone of 75 billion in user-based assets under management that are utilizing the system in some component, some way. So whether it's the full analytics platform, they're using our bond inventory offerings manager, they're looking at it from syndicate operations and underwriting. It really kind of runs the gamut, but you can see that in a matter of just a few short years, we've really grown the number of assets under management that users are coming on and really seeing the value. And so we're really excited that the system now represents some very large and very transparent organizations. And we see nothing but a bright future here, assuming that interest rates don't go to zero and we're all out of a job. So, I can't control the Fed, but I suppose anything is possible. But assuming that things still are moving forward, that we definitely have a bright future here, and Quantrix is a huge part of that. So I'm going to switch this over now just for a couple of minutes. I know I've been speaking here, probably coming on 35, 40 minutes here. But I just wanted to give you guys just a quick example of some of the models, the presentation canvas. I think Tom is going to go in and talk to you a little bit about the logic and structure inside of a matrix. But what I wanted to do here is just show you guys let's see if this does it here. This should get us here. There we go. Yeah, so show you guys a bit of a presentation canvas from what our clients see. So this is specifically a model that is what we call our dashboard. And so this is kind of a core model that an institution would come in, and this is built all in a presentation canvas. So this is kind of what I was speaking to in the idea of, the colors, the graphs, the tables, the things that we can put together that you could probably tell if you tried to do this in a spreadsheet, something similar, it would be pretty difficult. But the presentation canvas built inside of Quantrix allows us to really piecemeal this and make it very modular. So what looks like one complete canvas, one complete dashboard with all kinds of elements here, each of these elements, and this is very, very beneficial, each of these elements is actually separated and is stored in a really efficient manner that we have logged in folders, and that we can go back and reference inside of those folders to find the specific matrix or table that it's speaking to. So if we ever find anything where there's an error, it's very easy for us to come back and pinpoint where that error resides, make the fix, and have it update on the canvas and move forward with it. So it makes error checking and the idea of going back and having to look through an entire spreadsheet is really a thing of the past because of the modular ability of essentially building these out piece by piece. So you can see here that, and again, I won't get into the numbers because these probably that won't mean a lot to you, but for our clients, this makes a lot of sense. So this is going to come in and speak to their liquidity, their available money to actually be invested. It's going to speak to the portfolio characteristics about what kind of yields and durations and average maturities they're running. It also starts to break down their portfolios from where their portfolios reside today versus where the target is. So they've gone through the process of building a benchmark. They can come in and see those variances, and if they want to understand where they need to improve, they can come in here and interact with the screen through their browser so that they can start to see where their target differentials are really moving away from the idealized zero variance of the specific asset allocation. So this is basically telling an investment manager there's a specific asset allocation in a specific space that they want to speak to. So they'd be looking out at, for instance, here in the 3 to 5 year area in what's called a callable bond structure. So this is something that tells them that they have about 20 million they can deploy in that space. And so they can move from there and look at some other elements, some duration and maturity target breakdowns. And then there's also this asset liability ladder that actually allows them to come in and visualize where their liabilities are so that they can start to match the timing component of the asset. So they can come in here and start to see, oh, well, I know that if I'm going to be, let's say, in the 1 to 3 year space in bullets, I can come in here and start to pinpoint very accurately the types of months that I want to start pinpointing for that institution, because the institution understands these are months where there's typically lean cash flows. There's not a lot of tax revenue coming in. They need to be prepared to pay out a lot of money. There's a lot of debt expense going out. There's payroll. There's pension expense. There's all these things that public entities face, and so this gives them the ability to come in and visualize very quickly where those assets should be placed. And so what we've really created here, and there's quite a bit more to it, but what we've really created here is in many ways why we call it the dashboard, because it is something that just like your car, very quickly gives you an idea of how your vehicle is performing, right? Do we have gas in the tank, right? Are we at the speed limit, right? Do we need to, is our oil pressure good, right? So there are all of these elements that we've been able to build in that we can now deploy to them. And the beautiful part is because of the cost structure and everything that we have set up, they don't have to pay for this. This just comes with part of our value add proposition for us to be able to cover them. So we come in and compete for the execution, but we're deploying these analytics so that they can get a really good view of what's going on in their portfolio. So there's a lot of other elements that we have built in, some very cool things. This is just a new system here that we actually deployed, or a new canvas that we deployed, that allows them to actually come in and run a pass-fail compliance check. So if they've come in and put in all of the parameters that their portfolio requires, so their maturity parameters, their rating parameters, their asset allocation parameters, they can come in here and it's going to run through, and the cloud is basically going to tell them a pass-fail. And so you can see in this particular case, all the lights are green. So that tells them right away that they are within legal compliance of their portfolio. Now, this is something that if they have to do by hand, which almost all of them do, that is actually can be a process. They have to go through and look at every single security and audit it and make sure that it's within compliance. But we can build in the that core information, those core constraints, and let the system do it for us. And so it does provide some really cool value there. The ability to just produce treasury reports that the system will allow us to just come in, create a quick PDF, so we can come in, export a PDF. So if they have to send something to their bosses, they don't have to share the model with them. They can come in, create a PDF, and send it off to them without having all of the dashboard elements. The nice thing about this as well, and we were talking about the flexibility of the system, we'll get requests. We'll get clients that will come to us and say, hey, Jason, I really need to see a customized version of this. My boss is asking for it. And in most cases, we're able to come back and deploy something same day. So we can come in, manipulate, change up a presentation canvas for them, create a treasury report. We can now deploy that. And then the nice thing is we've now saved it in the background. It's now a deployable asset for other institutions. And so everything that we developed, and a lot of these things, I can tell you, were developed out of requests and having conversations with many different institutions, of coming in and saying what they needed to see, and then us being able to save that and now deploy it for everyone else. Because if it works for one, chances are that, and many times, that it actually works for others. So this is a very cool system, and allowing us a lot of flexibility and customization for us to come in and deploy assets very quickly for our clients, and they really appreciate that. And then from there, there's lots of different perspectives that the system has built into it. I'm not going to go through all of them, but this is an example here. You see all the tabs on the top. I mean, these are all just reporting functions, one of many different presentation canvases we have, that if they ever needed to do the cash flow tracking for individual securities, needed to understand the payout dates, needed to understand their issue ratings, their yield breakdowns. I mean, all kinds of different things that we've built in that have just built up over time, that have allowed our clients a very robust analytics platform without having to deal with designing it themselves. And that's a really big part, because the third-party platforms out there right now that really do some of this, they certainly don't do it in combination with what we're doing, but some of these aspects of being able to run a portfolio, for instance, one of the most expensive ones, which, if I quote the price, it's fairly offensive. It's extremely expensive, but in order to get a visualization out of it, it will kick out the data. But if you want any type of visualization, you have to go into Excel. So they'll sell you Excel templates in order to actually create the visualization that you need. And so it seems like a pretty, ridiculous amount of money to be spending on something that doesn't even give you the results you want in the format you want it. And so we've, in many ways, I think, solved for that by being able to integrate it all into one system. So you can get a good idea there. One other thing that I'll just show you real quick. So this is an inventory manager, and I just kind of want to show you just how someone can come in and interact with the model without really changing anything. So you can see down here this table. Outside of being able to sort or collapse items, you really can't manipulate it. There's no way to come in and change the data. I can't type over this. So it's all locked out. But these yellow boxes I've made as user override. So I can come in here and start to constrain the data for very specific things that the individual user might be looking for. So all of these boxes are overrides and filters that any of our institutional clients can come in and start looking at and saying, oh, okay, I want to break this down by maturity, I want to break this down by price or by issuer, or even can come in and start breaking it down by the months they don't want to see because it doesn't fit their ALM ladder, so things like that. And we have some ability to come in and do credit reviews, and the ability to come in and You'll look at corporates, fixed callables and bullets. You can do inventory searches by date. And then we can even come in and do a pre-purchase evaluation that allows them to come in and we can link their portfolio, their book value, their yields, and their durations directly to this model. It pulls in that information. They click update, and now they can actually do a full pre-purchase evaluation by pulling up very specific securities that they can buy, and the system will kick back and tell them how their portfolio is going to react. What's going to be the change in their overall yield? What's going to be the change in the effective duration of the portfolio? And they can do it based on their own accounting of book value. If they're using a constant yield or a straight line amortization or something along those lines, they can come in there and do that, and they can come in and use their own holdings to make that happen. So very, very unique to be able to come in and look at their portfolio and then actually show what the security transaction is going to do to the portfolio before they ever actually even engage in the transaction. So those are two quick examples, just showing you the canvas. Again, I know Tom is going to talk to you a little bit more about the actual matrix itself and the logic. So what you're seeing here is just the output. There's a lot that underlying this that you're not seeing, but hopefully this was somewhat enlightening as to how we use it. You can see that we are one of the few, and I think that when I first talked to Tom years ago, we were the only at the time Quantrix user that was purely client-facing, meaning we had built this out as only meant to be used by outside institutions that were our clients and not internal users. So our focus was very much on the presentation aspect of this, the reporting ability, and Quantrix has come a long way with being able to deploy some of these canvases. The printing aspect of it, a lot of that has really come pretty far from where it first started, and hopefully, as you can see, this is a really robust tool set that gives us some very professional output for our clients to use. So with that, I probably overstayed my welcome here, so I will turn it back over to Tom. If you guys have any questions, I think there's going to be a Q&A at the end of the session. I'm happy to answer whatever I can. So let me turn this back over to you, Tom.
All right, thank you so much, Jason. Excellent presentation. MaxQ Analytics has just blossomed way beyond what I envisioned back 5 years ago. Like I said, it was the most impressive user presentation I had seen, and I'm so glad that we are able to see it and share it with our clients again today. So yeah, thank you very much for passing it back. We've got about 10 minutes left here in the session. So what we thought we'd do is describe the Planning for Good program. I'm not sure if you can see my screen yet. Let me make that change. There, I think we should be, can you give me a thumbs up, somebody, to let me know if I got it correct here? But what we're going to do is basically transition. Thank you, Jason. So we're going to kind of skip ahead a bit and get right to our Planning for Good program here. I was intending to give you a quick demonstration of Quantrix, just how its multidimensional structure works, how the natural language formulas and always-on pivoting features work. I think I'll save you from watching a salesperson's demo of that, but I invite you to contact me. I'd be glad to give you that quick demonstration at a later time. So anyway, we'd like to introduce our Planning for Good program to you, and what that means, or what the genesis of this is, that we thought about the things that are happening in the economy right now with COVID and all the changes, and how everyone's existing plans have basically turned to scrap, and people have had to reforecast or rethink their plans going forward. And when is the last time in the news that you've heard so many references to modeling? So you folks out there who are already Quantrix users, we're preaching to the choir here, but Quantrix is just an exceptional tool to help you model and forecast and look forward for your business to be very agile in that. So the genesis for Planning for Good was a way of helping, trying to help our existing clients, yes, but also help those budding planners and forecasters and modelers out there, to help them get a jump start on using a tool such as Quantrix. So there's three facets to our program. If you're new to Quantrix, we have what's called the no charge license, and all you need to do, is fill out the form. This is on our website under Planning for Good, and fill out the form, and we'll send you a trial version of our software, fully functional, but it'll last until October 31st. So it gives you a good long time to work with the software, test it out, build models, really solve some gnarly problems for you and your organization, and really get to learn Quantrix. For like we had today, we're going to continue our webinar series. Next up will be Rich Houlihan from Logistics, Capital, and Strategy. He's built some incredible models for people in the transportation and logistics industry, and he'll be describing that work. And then for our existing customers, we're not forgetting you either, but we're going to give you a free activation for your ability to help you work from home. So if you're already an existing Quantrix user under maintenance or under subscription, we'll give you an additional activation so that you can use the software on an additional computer while you work from home. So those are the three major facets of the Planning for Good. Brad, is there anything I'm forgetting here before we transition over to the Q&A?
Just one more comment about the Planning for Good license. So as Tom mentioned, that license expires at the end of October, but we do also have our 30-day trial. So if you have an organization that's got a few different people that want to check out the technology, you can elect one of those per organization who gets the who can use the license until the end of October at no charge, but others can use our typical 30-day trial as you see fit. That was the only comment I wanted to make, and then we can jump over to the questions.
Excellent. All right. So Q&A. I'm going to turn it over to my colleague, Brendan Donahue, to moderate this section of the webinar. Take it away, Brendan.
All right. Thank you, Tom. And I just also want to echo my thanks to Jason. This was a great presentation, and thank you for being here today. Sure. Yeah, we do have a couple questions, and as Tom and Jason actually alluded to, if you have any additional ones, you can go ahead and put those into the questions box. If we don't have enough time today, I'll get back to you as soon as possible. So one of the first ones I think we can go into is, so the current economic climate and the pandemic have affected a lot of industries and organizations. Did your customers, your clients, did their businesses change? And then I guess as a second part to that, did the flexibility of Quantrix impact, anything that you had to switch up with reports, or anything that you did or showed, in those types of models on the cloud you had? So is there anything along those lines?
Yeah, so I'll answer that here in two parts. So the first thing is that, the process, the economics are consistently changing, right? So, in the past 10 years, we've seen the ups and downs of where the Fed has moved interest rates. And so, the investing climate itself is something that's always on the move. And so, there's always reactions and changes to, some of the strategies, the technical deviations and things that are being employed in order to stay, optimal within the marketplace. But the process of how you come to the answer doesn't really materially change. So the good thing for us is that the core analytics, the dashboards, our IFB models, our historical tracking models, all of those things are going to be relevant no matter what the environment brings to the table. It's just the output that's ultimately going to change, and telling them what they ultimately need to be doing, where their portfolio is most optimal, so on and so forth. And so from that perspective, for us, things haven't really shifted. So we haven't had to adjust to the climate and start to create new core models that adapt to a market. It's really the market is just being adapted to automatically through the data that's coming through that is, changing the models, to represent that new market. So from that perspective, no, there's not a lot of change. Now, from the agility aspect, because when you do have markets like this, and all of a sudden we're in the middle of a pandemic, we're in a really low interest rate environment, and so we've got two problems. We've got increased expenses that are coming from the municipal side, from the city, county, and state level. California this year, I think, is now going to be running a $58 billion deficit, when they had projected a $6 billion surplus as of January. And so, that dynamic for them and for states in general has really shifted. There's going to be a lot of additional outflows. And so it's at a very time when interest rates have gone down and their ability to generate revenue off of existing reserves is really going to be impacted. They're not going to be able to, make much money on those reserves. So they're really just going to be concerned about, principal preservation, liquidity, which are their primary goals in the first place. But it's really going to be difficult to reach out for yield and build off of that. And so what it does require is that there's going to be institutions who are going to have a lot more interest from their constituents, from their county supervisors, from the actual treasurers themselves, who are going to start to come in and ask questions, because there's additional pressure put on them to try and come in and reach for that yield and try and produce in a market where there's a tremendous pressure on the expenses. And so we will get requests for additional reports and customizations and ways to be able to transfer information in a way that they can understand, because there's going to be times, like in our treasury report I was showing, that's going to be a report that's really meant for those who aren't doing this every day. We don't want to get them lost in the details of the benchmark analytics and the strategy and the duration weight differentials and all of those things that frankly would make most people's eyes glaze over. We want to be able to translate that information into usable analytics and something that the layperson who's not doing this every day, who doesn't really understand the environment, to be able to see it. And so with Quantrix's ability to come in, create models on the fly, or adapt current models with new canvases, we can do that. And so I just did it, I think probably about a week and a half ago. I did it for a client who needed a very customized version, a stacked chart, basically, of their asset allocation of all of their holdings a year in. And I was able to do it for him and got it back deployed within 2 hours. All right, so it was a full new report for them to be able to come in and click on the securities they wanted to show the stack chart, all of that. And, from the time he asked to the time we deployed it was, maybe 2 hours at best. So it's just a great, I think, representation of how we can, in most cases, very quickly adapt to it and address customer concerns or customer needs in a way that I feel, most banks, and certainly I don't really know that we have a competitor per se that does what we do to this degree. So, from that sense, there's really no one else out in the marketplace that can do what we do in that quickly in this environment. To be able to deploy it online and have that access. So I think that really gives us a very unique edge, to be able to come in and really adapt to the circumstances and the changes that the clients need.
Great, thank you so much. And so I know we're at the very end of this here, so I know we still have questions coming in, but I will make sure that I get the answers to you and email you back if you've been asking a question. But we just have one more I'll get to right now that's a little bit more light in nature, but in terms of like models and size or complexity, is there any model that you've worked on that's interesting or noteworthy to talk about that in terms of size or complexity, anything like that?
Yeah, so there are models because, as you go through this, and if you're someone who's really, interested in, the analytic side of portfolio management and looking at fixed income and all of these things, you will typically end up developing things that aren't always going to be deployed, right? Because not everything is necessarily functional or efficient for a user on their end to be able to deploy it. And so we certainly have models, and I have one model in mind that I actually have not deployed, but it took 6 months to build it. Because it's something that I reference internally, and it's a credit model. It's something that really goes in and looks at a very large array of data and starts to break down that data into all kinds of different components and gets very, very technical in some of the ratio and outputs and things like that, and starts to rank individual securities across the spectrum of an entire index over decades. And so it was actually a pretty difficult model to do, but it only would have been capable of being done in Quantrix, simply because of the data size that I had, which was dealing with, again, index data that was well over a gig in size. I think that database was probably closer to 2 gigs in data size. And then, also the number of breakdowns and structure changes that I needed to be able to pull from the same data set, but make different comparisons. So at the index level, make comparisons. I needed to make comparisons at the issuer level, and then I needed to make significant comparisons at the actual security level. And so each of those elements had to be designed and then interact with each other and make sure that the data lined up, the math was right. And so yes, there's definitely ways to get very technical and very complex, but we've limited that complexity and tried not to overwhelm our client base with things that aren't going to be widely used, or something that is maybe a little bit beyond the technical scope of our average user. So we won't deploy those. But Quantrix definitely gives us the ability to run the gamut on from how simplistic or how advanced we really want to get. And I think that's a beautiful thing about the platform, is that the ultimate solution is about your creativity and your ability to come up with what makes sense and what gives you the best way to deploy the output to get to the answer. And so it's really the sky's the limit type of environment.
Do we have time for maybe one more question? Because Melanie posted well, it's a two-part question, but I think it might be a good one for Jason to handle for the rest of the folks.
Yeah, sure.
You want to try that one, Brendan?
Yes. So the question is, can you share with us the way you price the model service to the institution users? And a second part is, do they manage themselves in terms of the import data of their portfolio?
I see what you're saying. So from the pricing perspective, I assume they're asking about how the cost associated with each account it works.
I assume you're charging your clients. I think that's the question.
Yeah, no. So the answer to that is no. We are not charging our clients, and that's very, very specific to the very beginning of what I was talking about, is this dissipation of value add and the limited budgets and constraints that the institutions have. It's very difficult to be able to come in and charge a fee for us in this particular space. Again, I'm talking about a very niche, very, I think a very unique space in the sense of institutional investing. But this, because of the fact that you have large sums of money being managed that need help, but yet have very limited ability to do it because of their own staff resources and own limited budgets to be able to pay for it, we've come up with a solution that I think gives the best of both worlds, where we're able to deploy the type of output and the things they need to see, but we can do it in a cost infrastructure that allows us to absorb the cost, because we just win through competitive execution. So we end up with a lot of loyalty from our clients who come in, and at the end of the day, we end up being one of their top brokers because we are providing the value, we are providing the data, and if we can come in and also compete on price, right? It's the kind of the tie goes to the runner scenario, right? That at the end of the day, there's that loyalty aspect and that appreciation aspect where they're going to come in and they're going to say, hey, look, I know I can do this bond with anybody. I can, we're going to end up paying commissions on it, but we will, if they can execute at the right levels, then we're going to give this bond to Mischler because they're providing us so much more value than what anyone else is doing. And so that model for us has worked, and we hope to continue that model because it's something where I don't want to have to transfer the cost aspect of this onto the clients because of those unique circumstances. And so we've been able to grow, and again that kind of goes back to the idea of our organic growth. It's why we've also not put a lot of money into trying to hire tons of more personnel and get a lot more people out there doing this, because the expenses would add up very quickly. And so we needed a very organic approach to limit the cost infrastructure and grow this with very solid core clients who would also be advocates for us. And so we have, I think, a slower growth than we could have if we were just throwing a ton of money at it. But the growth has been pretty astounding, just given the fact that there's been, so little attempt on our part to do outside advertising and marketing, and we've really relied a lot on client referrals to come in because they understand what it can bring to the table and how it can, really help them do their job, and they don't have to go to their budget committees to get, permission to pay for something. And so that's a huge, huge win for us. We just have to get through the, the aspect of being able to cover them from a legal perspective and through their, RFQs and RFPs and things like that. So hopefully that answers your question there. And as for the portfolio analytics, yes, I mean, the data and things like that are being provided by the clients. So we don't, warehouse that data. That's all information that they're storing in their accounting systems and things like that. They're providing the information, through an API that they're ultimately able to upload, and then our system will go out, it sees the data, and it can kick back the visualization. So it has to do with the idea that, their ability to upload the data to a separate location, and our system can see that location. That goes back to the whole thing with the data separation of the logic and the structure of why Quantrix is so beneficial, because I don't have to have it stored there. I can have that third-party storage of information, and then let our system read that info and then kick out the visualizations that they need. So hopefully that kind of answers the question there for Melanie.
Oh, thank you very much. All right. Thank you. Thank you all. Thank you to our presenters, to Jason, to Brad and Brendan for being on the session today. And thank you to everyone who's tuned in today. I hope you got a lot of value out of this. I encourage you to take advantage of our Planning for Good program. You can find it here at this web link that's displayed on your screen. For our next webinar, which will be scheduled in late July, we'll have Rich Holohan from Logistics Capital and Strategy talk about his work in using Quantrix to help transportation and logistics 3PLs or third-party logistics companies figure out how to plan and map out their strategy for carrying freight. And then if you have any questions for us or for Jason or anyone on the team, please reach out to us at customerservice@quantrix.com. And if I can just leave you with one last thought, Quantrix, it really does help you take charge of your organization's future. So, please utilize our Planning for Good program and keep us in mind when you're looking for modeling and forecasting tools in the future. Look forward to hearing from you. Thank you all again, and we'll see you again in a month.